Have you our be devoted totally to activity-based costing, and much of it, the answers to case 2, which cover activity-based costing. So what you have on the screen now is requirement and this is part of the document, which is the answers to case 2, which is posted. To compute the cost for, and see that the first column represents the activities, the sequence of a major identified to a second column. These are the costs then pulled together by activity. So this has also the results are that all the costs associated are all the costs 600 and so on. Obviously, they sum up to the total support cost of 6,000. Now, the activity cost drivers that were chosen for that machine, a number of machine hours for running machines. You quantity, the driver quantity column, the cost drivers, and those levels come from easily that the runs summation in here costs are here. The 10,000 machine hours come from the line summation for total machine hours. And now the rate by the objects the for the activities of handling production runs, the divides is 3 run. But up hours, which is 800, and that gets you $42 of setup machine costs per setup hour. Support products, therefore, products the machine doesn't. So the ACDR, 20% of machine running costs. So the ACDRs are calculated. Any questions about the ACDRs? So you have to the cost assigned from here. Pens is the number of the units are your cost bands, plans, and have 4 products. Blue pens. The 10,000 units pens here, product here identified, and the types of pens are identified by the color they're in. Actually, the same. The only difference here, the same structure, the only difference color, the color of the ink. Oh, that's a difference. Costs for the machines are not unit oriented. In other correlated direct units, right? It's not the case. If you look at, let's go, right? It is not the case. It has 50 purple. The number of units of blue pens produced 50 times and the number of units of pens. That does not necessarily mean that the support costs for cost. So therefore, there's a difference. And the for example, the cost of sustaining purple pens, the product purple pens per pen, per purple pen may be quite higher than the cost of sustaining blue pens per blue pen. And once the numbers bowl, basically mission accomplished, because remember, our mission more better way, more sophisticated way to allocate to the support. And the better way to allocate the ones in taking the allocation to the objects which are blue, and the allocation based on each activity, each identified activity separately. So, let's numbers. Well, let's go over some of the numbers. And handling, remember, in the production runs that is allocated to 100, you look at the numbers below in the parentheses by asking what is the cost driver of handling production runs. And we know that the cost driver that we chose is, so then we ask what are the number of for, and the number of runs that we used for blue is production runs for blue is 70. So we use 50 runs. Per run, how much of run times $330 of cost of this particular cost of this activity to 1,100. Here. Let's look Zen machines, the cost of setup machines for black, and the cost allocated here of setting up the machines for 52. Well, again, how we get it? We go to the level of the cost driver and we say, first, machines back, how many did we use? 100 for the cost of the AC. We must and black, and so on. So all the numbers are calculated by the same method. So now we get the total indirect costs assigned to all. We sum up the for blue, and we get 59,460. The cost of all the indirect performed for black, 8,402, and 8 sum to the total cost of 100,000. Bottom line in table 4 gives you the allocation to blue, black, red, and purple pens based on activity analysis, and that's really what we wanted. So basically, so the requirement now in 3 is basically a new allocation of indirect costs by product. So all you have to do is to plug the new cost sales as did earlier, material, direct labor, which costs 40% of direct labor, so you 40 the numbers here. I think the difference from previous analysis materially is the support cost of the indirect from the into the margin. Now you can compare an activity-based costing with table number 1 that was based on traditional costing of the indirect costs. And what you find is that there are dramatic differences in the gross margin and in the percentage profitability. The margins and saw that based on traditional costing, all the type of pens were profitable. Under the old analysis, in red and terms, more blue and black red and quality. Productivity difference in point. White and proper 6.8% of sales. Purple is a normal 0.8% sales. Dilemma now before management, different set of cost and profitability numbers for the products. Which we go by with decisions, and we have to make decisions, very important decisions about product mix, which on the basis of what basis of, well, I think it figure out that the activity-based costing method produces more accurate because of activity analysis. And the analysis of the activity behind indirect inputs and the indirect costs, the level of different products. For example, purple and red require considerably more setups. Smaller. It's to not only the number of setups requires more time to set things up as the one reason is out the previous actually we did that already, but if we go back to different that well, the set it was color, so to other color more, and red and purple require the highest number of hours. Example, requirements in inputs and their costs that are behind the production here. In production runs, we saw that relative to the number of units produced, requires much more production runs than blue. Not an absolute number because we produce 50,000 blue pens and only 1,000 purple pens. Relatively speaking, the number of runs is higher because they're produced in very small batches. So we know that our first method that, summed up all the costs of all the activities and lump and then allocated everything based on direct labor hours for each pen. Don't count for all those differences. So simply because of our knowledge of what's going on, and even at this of the activities and the cost drivers, that these numbers, activity-based costing, are much better numbers. So I think that if to choose, we activity-based numbers. The next was a requirement, but we're going to use activity-based costing numbers. Its results to improve performance. So how we can use decisions. One important decision is a product decision. So any thoughts about what are and what the options are? What the different strategic options? Imagine yourself, you are in a management meeting of Cooper's Pens, and now, and basis on this, you want to just mix. So yes, yeah. One thing that's logical is product and very simple. Let's phase them out. Let's get rid of them. Will increase profitability, right? It clearly is product profitable. If we phase them out, profit. Butter products are blue. Okay, that's one. Any other? Well, of course, the are profitable, but can we take that will make all profit differences between revenues and costs? Use first. You go to table one, prices. what we see is that we purple only slightly higher, right, than 60 relative. Well, maybe we should, maybe we can't. I don't know how much. And, uh, and if we can price them significantly higher, we may make them profitable. So we can calculate how much we have to price them higher, other things being equal. Consideration. Of course, it's nice to it's difficult to conceive that a company, right, they're competitive. And the question is, how high can you price before you lose much in terms of the quantity of sales by people shifting to other competitors? But the pricing issue should be investigated. Now, that's one way to make what you mentioned, the we in being reduced of red and purple, and by reducing the cost, make them more profitable. So, better way of producing. You produce very small batches because they sell in small volumes. Or maybe it's in time, and then and you have to see what are the costs of high inventory. Can keep pens in inventories without the ink drying up, for example. But these are things to consider. So you could look at the operational side and how much in productivity profitable. New products are just manufacturing them. Maybe maybe the company needs time to ins use the actually increasing the volume. Let's strategic consideration as to overall strategy of companies we want to produce in this. Do we want to put emphasis on cost leadership? Do we want an emphasis on diversification? If your costs as low as possible so that your price become one of the low advantage over your competitors by able to sell price and so leader and a class many years of the automobile industry. The early days of the automobile industry, automobiles were rare and they were considered luxury products. They were fairly expensive, produced in small batches or individuals. Revolution of Henry Ford let us, the Ford company, become a cost leader. Because I know the United States own cost too high, and the reason the prices is too high because it's too costly. It's high cost manufacturing. So let me find a way to reduce dramatically, increase cost, produced. Then was a revolutionary idea of mass production of cars through a to us. Most cars are produced in mass production through a at that time it wasn't obvious at all. So, ideas that look obvious now, that's fine with the hindsight. The wheel looks an obvious idea now, but before the wheel was invented, right, people were just dragging things and fighting traction, and they didn't conceive of the idea that they could put wheels on things, right? So to produce, but the product also had to be product very, very standard cost. So this is, as you all know, and the typical saying about this car is that you could have, as it was, didn't have the end, right, looked like the Model T. Then that came later to the idea of mass producing houses when people started to the suburbs in order to enhance the moving to the suburbs and make cost of housing piece the town. You with identical houses. You could buy a house very was the same look loss leader. Not one cost. For example, if we return to Royce versus in the so still part of the production of Rolls-Royce is that you pay hundreds and hundreds of approach. So depends. You have to make a decision whether one possibility so but use it's going to say we are going to now in question. Maybe there are companies that are interested very that are interested elegant of a higher question is, do you want to carry to diversify, and do you want to have cost leaders and more full line on cost? You want to concentrate only on quality. Foam pans that you probably saw them in exclusive stores are not interested in cost leadership. But they're pens for a variety of reasons, known and unknown. So again, the issue is we can't answer those questions on this about the to preferences of the customers. What are the key company? We don't. It's a very brief case. We don't have. It's important for us in a cost management. Make it important. We basically need decisions. Information, in this case, higher accuracy in cost information provided is something necessary. The other that is provided by activity us not only accurate information, where the problems are and where we can improve. We move to 6. Any other comments or? Six, if ABC result changes in that happen for estimating the value added of the ABC relative ABC well, the idea established the fact that going to activity-based costing is very likely to increase accuracy in many cases. And many activity-based costing. Well, so companies that are doing traditional cost are expensive. The answer is, I heard the word so free in terms of improving decisions and at its cost. In other words, it can be quite costly in terms of implement the system. Now, if you don't want more accuracy for the sake of accuracy, want more effectiveness. Let's say if that enhances. So in what many consider before they 8 and benefits traditional costing to ABC. Incremental benefits exceed the incremental costs. Of course, it's an estimation. Then there is a good reason to go to ABC. But if you simply have the information here, obviously it's a very difficult of so all that you're asked to do is to identify cost categories and benefit categories. Well, the increment. First of all, the high analysis. Or you know to do detailed activity analysis sequence of using and so now that could be quite an undertaking because with types of activity but complex production and many products of correct sequence in may human. The analysis can be the edit, see which activities add value more, which add value. That and you define the sequence, the alternative sequence of important activities, redundant, and then of pooling the relevant activity cost into their respective activity. So it's not trivial to try all, because the costs are not reported necessarily that way. So you have to look at the costs that are classified in that you can relate activity that you identify and decide which costs belong to which activity. Costly effort. The cost of selecting the most appropriate cost drivers. You have to put thought and analysis into what is the most appropriate cost driver for each activity. So you have to gain better understanding of the relationship between costs and activities. And it's not only which cost driver is appropriate, whether it's feasible. And on top of that, when you've gone through all this effort and incurred the cost of doing so, you also have to continuously update those analyses, all those figures and all those analyses, because technology is changing, operations are changing, and as the activities are changing, and as things change, you have and to keep abreast of what is happening. So actually, what you have to do is to estimate all these costs, which are not easy to estimate before you see, before you undertake. So the categories of benefit. Activity-based costing is the method that triggers analysis and analysis of activity sequences, which wasn't there before. That is a major benefit in and of itself, apart from increasing accuracy of cost. Likely to get a much better understanding and get idea of how performing in terms of good. And that of activities to eliminate redundant, to reconfigure so as to increase your efficiency. So when you pull the costs together into activity categories and your cost drivers that drive the cost of those the related activities, which can improve the decision making. And of course, most of the time, more updated, accurate cost information to work with to that on the basis, and you can avoid grave errors. Primitive working with. Remember in Cooper Span, old cost to decide. Purple and red pens because they were the most profitable, right? Your decision reduce your profitability. So you have benefits in pricing and profitability analysis. Again, value on this is very difficult, and I'm not shift ABC. Some of them he will out. It's possible to go through this before implementation. Any more? Now, this is case number 1, and it's going to be over. It will have to be the planet, and it looks like created that, and then turned, and the procedure is that if you like the feedback, I think is intact. And if do it this way is time next. It's just issues. The idea is maybe ABC is a good method, but when it's implemented, there can be issues. There can be important issues in terms of the quality of implementation. So there's a listing here and arise, self-explanatory. If there are any questions, I'd be happy to answer them. They're basically self-explanatory. So what I would like to do now is to take a 10 minutes break and then have a short session discussing an implementation of ABC to marketing and selling. What we have done here is manufacturing, and I want to have a brief example of how activity-based costing can work in the areas of marketing and selling and customer profitability. So let's take 10 minutes break and reconvene. Thank you. See.
Yes. So number
For the ABC, right? 13 and a half. Well, that is margin, right? As a percent. As a percent. You see, it's margin as a percentage of sales. So you ask yourself, this gross margin figure, what is it of dollar sales, right?
uh, gross margin for ABC system is different. Traditional accounting system. So the
Is back to
I don't because the
offs, the work. Uh,
yeah,
but that is
sell
change if you produce units, so you still fixed level. The
but
remains it people you need, right? But you are not allowed to fire people.
yes.
So if you produce less,
Yes, it that choice.
oh, yeah,
Okay.
okay.
Just, just all.
Right me.
Oh,
And,
I will,
okay,
thank
thank
you.
you.